Always fires me up. I do like that tune. There's no doubt about it. Welcome out to our halftime report here, tackletrading.com. And we've got Coach Matt, the CEO of Tackle Trading, my brother, my trading partner, and apparently Oakland A's fan here today. Matt, are the A's in the playoffs this fall? I haven't been following baseball enough.
We've actually talked about that in the report here. Your sports acumen is just going down every single day. You're getting to the point where you really shouldn't even talk about it. But I don't have much to say because my fantasy football teams are literally like 1-8 so far this year. So I digress with that. But yes, I am an Oakland A's fan. Been a lifelong Oakland A's fan. They're my team, and they're playing the Yankees on Tuesday for the opportunity to play the Boston Red Sox, who is my father-in-law's team. So we're looking forward to hopefully a nice little series later on this week.
Well, I love baseball at this time. I love baseball in general. I will obviously, this about me. I don't follow sports as well as I did when I was a kid. I don't know why. I just don't have as much of a drive to know what's going on all the time. But when there's playoffs going, I love sports and I love live sports, and I can't wait to see some of these MLB
Listen,
playoffs.
when your team is the
The
Metropolitans,
Metropolitans, yeah.
right? When your team is the Metropolitans, I understand why you don't follow baseball very much. But no, it's I think baseball, like a lot of baseball fans, they don't really follow and watch the games during the season. I mean, it's 162 games, lasts for like 5 months before you even get to the playoffs. But playoff baseball, October playoff baseball is just something I enjoy every single year, even if it's not the Oakland A's. But we don't get this opportunity very much. So hopefully it lasts more than one game, T.
Yeah, October is a wonderful time of year. Earnings season in the market, volatility in the market. There's a lot of history around it as a trader.
Christmas, Santa Claus rally happening early, maybe.
I love trading, and I love this
Yeah,
time of year for
fun.
trading for sure. S&P is up here today, Matt. To me, we're approaching resistance. Now, first thing I've got a question on, obviously, the news over the weekend was the USMC, the United States, Mexico, Canada agreement. Now, is that the official name, by the way?
Well, nothing can be ratified until they got 60 days. Okay, so this is
Okay.
why there was such a rush coming into this weekend. Is once that deal is kind of negotiated and agreed upon, the Mexican president is leaving office December 1st. And so from the time it is agreed upon, it triggers a 60-day window until they can actually vote on it. And so they wanted to get this done so that they fit that within the October-November window that they have to sign the deal. And
Okay.
so, a big win for Trump, big win for the U.S. from a trade perspective, big win for individuals who do like free trade, and that is something that I do support as free trade agreements. So I think it's a good deal, Tim. I mean, it's number one, it takes out some of the volatility in the market, it takes out some of the uncertainty in the market. We've had progress with trade in Europe. We've now had progress with trade in Canada and Mexico. And obviously, you got the big juggernaut of China, where we haven't had anything really kind of happening. And that's really the big one. I mean, you're talking about the number one economy of the world, meaning the U.S. Economy, the number one producer and exporter in the world, that being the Chinese economy, and the number two economy in the world total from an economic value in China. So that's the big showdown. But, obviously we have a lot of ammunition here. Trump is playing his cards right. And again, I've always been the type of guy that will give credit when credit is due and rip on somebody when it's not. And you got to give Trump some credit here. It's a good deal. It's a good deal by the U.S. Just a couple parameters. Number one, vehicles being manufactured in the USMC. 75% of those components have to be, developed in the USMC. Under the NAFTA deal, that was 62.5%. So, a win for workers, I would say. And not only that, you might say, well, U.S. workers are paid more than Canadian workers. U.S. workers are paid more than Mexican workers, so that they'll just keep on outsourcing it. But, but here's what I'll say to that. Workers by 2020, 30% of all manufacturing in the automobile sector has to be done by workers making $16 or more. That is a specific trigger for U.S. workers. By 2023, that number has to be above 40%. Once again, that's for U.S. manufacturing, U.S. industrial jobs. So that kind of offsets some of the concern about, the 75% has to be developed in the USMC. Milk, U.S. getting a greater market share into the Canadian milk, which Canadian milk farmers are not very happy about.
No, that was the one. part I saw, they were actually very upset about it. They did not like
Well,
that dairy deal.
it's such a complex situation with the Canadian dairy farmers, right? It's such a complex situation, the government regulations and whatnot. But yeah, Canadian milk farmers are probably upset. U.S. consumers probably a little happy about that. No auto tariffs, Tim, for Mexico and Canada if certain parameters are met. And big pharma in the U.S. gets to sell more big pharma products into Canada. So, Trump played his cards right, and I think he got a good deal for the U.S.
I think it's a good deal all the way around. One of the things that is just striking to me, and Matt, it started last year with the TPP, and then the deal with Mexico and Canada, and all the debates with Europe and China this year as well. Obviously, some of the language in the contracts from 25 years ago did not reflect current intellectual property concerns, right? And so a lot of this stuff feels like it was just necessary. When you dig into it, getting a current, language in these deals that reflects the idea of IP and international trade and whatnot. I mean, Matt, the internet has changed things so quickly. I think they had to do some of that, right? So these are probably good.
There's nothing wrong with renegotiating, 25-year-old trade deals. I mean,
Yeah.
you look at renegotiating from a business perspective. Business has changed so quickly in today's environment that you have to constantly reflect the ever-changing economic environment. And I think this did a decent job in doing that. These trade deals are very, very difficult. They take a very long time. And I saw it come across the Twitter feed yesterday, and my instant reaction was good. Miami lost yesterday. I was in a bad mood. Now I'm in a good mood. Market's going to go up today.
They did take it on the chin yesterday. I wasn't going to bring that up. Let it soak in for a couple of days before I tease you about it.
Yeah, I've already said that they were the worst 3-0 team in NFL history, so I'm not too surprised.
Give me a read on this ES contract. I was talking to our pro members over in the coaches lounge this morning, and I was helping them, go through the routine and help them put some trades on. And we had a great volunteer, Mela Rosa, who's been, an active member of our team for a long time. And we got to a discussion point. Where's the resistance? Is it 2940, 2947, or 2950?
It's a great question. And it's a debate, Tim, that technicians have been having for the dawn of time, really. Is resistance the wick? Is it the body, right? And what I've always tried to say is you got to let the evidence do the talking, right? Sometimes it's the wick and sometimes it's the body. And for those of you who are fairly new to candlesticks and whatnot, the wick is just the vertical shadows on top of the candles and the vertical shadows on the bottom of the candles. That is what we call the wick, is the vertical lines within the candlestick. The body is obviously from the open to the close on a green candle. It opens at the bottom of the body, it closes at the top of the body on a red candle. It opens at the top of the body, closes at the bottom of the body. So for me, this is where the subjective nature of trading comes in. A lot of trading is rules-based, right? You do this delta with this theta, with this volatility, with these rules. A lot of that is just systematic trading. But when it comes to, identifying support and resistance zones, that is more subjective, where you have to use the evidence of it. And right here, to me, you got one wick, one data point at 2947. If you had a technician said that's resistance, Matt, and I always say that's resistance, it's the top of the wick, that's the ultimate price, and I would say, well, good for you. That's what I would say. Yes, you're right. And if somebody came to me and said, well, Matt, you know what? I got a wick and a body here, and then I got a body here. I got 2 points of data at 2940. And that's the resistance level at 2940. And I would say, you know what? Good for you. You're right too. Okay. That's where the subjective nature in trading comes in, is you have to give that resistance zone some type of number to trigger in your empirical rules, right? So for example, if you buy 1/2 ATR above resistance and you put resistance to 2940 versus 2947, that's obviously going to change the entry within that trade. For me, resistance in this would be 2940. That's where I would personally put the resistance because of the evidence I don't want to say it's overwhelming because it's not. We have 2 data points versus 1 data point, but I would say it's 2940 plus 2940 would be more of it's not a significant whole number, but it is a whole number, and it kissed its head right there on the wick today. So I think that when you look at the evidence, right, you look at the evidence and you say, okay, 2 data points from last week, it kissed it today, 2940 is your resistance.
I put it at 2950 because I said not all things matter that much. Just give it a round number. But then again, I know how I am. And the reason I say that, it comes down.
I would say to you that there is no evidence at 2950.
But it's psychologically where people would be paying attention. The thing, and here was my bit of advice. I said, listen, if you're a swing trader, here, hold on one second.
Go ahead.
I said, if you're swing trader and you're day trading, you need a specific decimal point. If you're just trying to set your posture for the market, it's not a breakout yet. Don't overthink it. Somewhere up there in that ballpark, they call it an area code, not an address, right? So somewhere in the 2940 to 50 zone, that's where I've got resistance.
Well, and also, Tim, resistance and support, like you said, it's an area code, it's a zone that typically is about 1 ATR, right? Mm-hmm. And so whether you say 2940 or 2950, if you're just trying to identify the zone of resistance, either one of those is perfectly fine because you're with that 1 ATR zone. I mean, the ATR on the index right now is 20. So if you said 2940, that includes 2950. So it's like, if I said resistance was 2940, I'm really saying it's 2930 by 2950. And if I said resistance was 2947, I'm really saying it's 2937 by 2957. And if you say resistance is 2050 because of the whole number, you're really saying it's 2040 by 2060. It's really important when you're setting up your trigger to get into a trade, right? It's not nearly as important when you're just trying to set your overall bias to the market.
Yeah, because we're bullish and we've been bullish, and it's a really good day on the market, up 0.48%. Pretty decent day, nothing too crazy, guys, here. Just an overall upward day in the market.
I know it was positive news, but if there was no news today, I would not be surprised that the market did the exact same thing based on the trend and the pattern and how the market closed on Friday.
I'll be more interested in the close here than the open. I want to see it close with some strength. Yeah. Going to the Dow Jones Industrial, Matt, one of the Dow components, General Electric, actually had some very, very good news today. The Dow is up 0.7% and actually showing quite a bit of strength relatively in that regard. GE came out and said, I don't even know the CEO's name, but they said that he was going to resign and move on. And they've got somebody, Lawrence Culp has been named the new chairman. And John Flannery was the old chairman, CEO. Matt, when you, and this Dow component, when you resign and your company goes up 15%, may not be a good sign, or maybe just the stock was depressed. I don't know.
I'm sure his retirement package was okay. I think he'll be okay. But he's been, and I forget his name as well, but he has been the CEO of GE for a little over a year now. You're looking at a year of data on GE right now, and you're seeing a stock that's been absolutely pummeled. He was hired to turn this company around, and obviously that has not been an easy chore. I don't think anybody can turn GE around, to be perfectly honest with you. Yeah. I think the next CEO is going to have the same outcome as the current CEO, being walked to the guillotine and getting his head chopped off in a year from now when GE is at $6 instead of $12.
Believers of GE who have held the stock probably for 30 or 40 years, they're gonna hold no matter what.
Well, I'm getting my 1.75% dividend, Tim.
Matt, I'm looking at the fundamentals of the company, and they have problems throughout that company.
It's a terrible company.
It is really, and really, this is where I think running big multinational conglomerates can be very difficult. A lot of the deals that have sunk GE were made 20 or 25 years ago. They were made back when.
Let me ask you a question, Tim. I know General Electric has this name, okay? But what is difference about General Electric versus a JCPenney or a Sears that has failed to adapt to the ever-changing economic conditions?
Well, from brand perspective, nothing. They haven't adapted. From actually, their portfolio, they're into energy, renewable energy. They're looking at some alternative stuff. Their power division.
That's what the argument for Sears Holding was for the last 10 years, Tim.
I get it.
What happened to Sears? Nobody cared about Sears selling products for 10 straight years. It was about Sears Holdings, which their investment portfolio was making more money than their retail business was. GE's very similar to that capacity. So, I hate to say it's a trash company, but it is. It's a bankrupt company, and the market's being, buoyed today by two companies that are not exactly fundamentally strong companies, GE and Tesla.
Yeah. But the short-term news obviously is bringing the Dow up. And sometimes when you're looking at the individual, index, you might not know why that one's higher than the other. And it might come down to just one or two companies. One thing about the Dow only having 30 companies, it can have short-term sensitivity in that regard. Yeah. Industrials were a perfect pullback, Matt, and that whole sector was spiking up. I still like the chart here. That red candle could be misinterpreted, in my opinion. And I love this right here. Actually, break this down for me for a second. You'll notice the candle was red on the daily, and that's because of the intraday pullback, right?
Mm-hmm.
It opened higher and came back.
It opened right here. It sold off a little bit coming into it. It's nothing to see so far, Tim. Just slight profit taking after the gap. I'll tell you, this gap is kind of ruining the entry point on some of the pretty decent charts though we've been seeing in the Dow Jones. It's a stock pickers market, still no doubt about it. But with a gap up like that, a lot of times it'll gap up above your entry points, and so you'll have to wait for a little bit of an intraday pullback to get back in. So you got to like the price movement on the Dow. The Dow is one of the in the scoreboard this week. The Dow is either one. I think healthcare was the top sector, and then the Dow was the second. I mean, not the Dow, but the industrials.
Yeah, we have it rated fairly strong. I like it still. I know that you might have missed the technical trigger for a swing trade on a couple of them, but this is where your intraday chart reading and skill sets will come in. Because if you can find that intraday pullback on some of those charts, Matt, you can still get into them by the end of the day, if not tomorrow morning. So there's plenty of ways to play them.
I was looking at those setups that we were looking at in industrials last week, Tim.
Yeah.
And you still have some really good setups, some for stock trades, obviously some for option trades, just depending on the liquidity in the options market. But Rockwell Nation, still kind of trying to form that little retracement coming back into the 20-day moving average. You have AME, which I think is setting up for a really good potential trade right here at Amtech. Right above the 80 barrier, that's looking at a potential trigger on the top side. The CME, this is what I was talking about on one of those types of setups where it gaps up and then you got to wait for that little intraday retracement. But I like the trend and pattern on CMI there. ITW showing you a pretty good reversal pivot back up. That'd be more like a stock trade. Lockheed Martin just showing price appreciation, maybe a little bit overextended. 3M looking very similar to CMI. Parker Hannifin looking like a beautiful picture perfect technical setup right here. Tough to play options on Parker. Just simply it's a little too illiquid. It's a high dollar stock, so not a lot of people trade the stock. But that for large accounts, that's a really good setup right there. Same type of setup here on Rexnord with the trigger right there above 31. That'd be a great stock trade. So you're seeing some really good opportunities. You just might have to be a little patient to wait for the news of today, the news of the USMC coming out. You might have to wait for that volatility to subside a little bit, but there's still some really good setups in the industrial sector.
Yeah, I like the industrial pullbacks as well. And there's a great list right there. That's the whole beauty of doing a watch list, guys, is the analysis that Matt did last week. He's now ready to pull a trigger on here today because he's got it organized right there in front of him. Keep your systems down.
Technically, I have it organized over there at Tackle Trading with the scouting reports, but
that's right.
Yeah.
Yep, same
Not
thing.
all of these made the cut.
No, they did not. They did not. Go to the NASDAQ, Matt. Third on my ranking, but quite frankly, really good looking chart today. This one, well, now that I should wait until I speak.
30 minutes.
30 minutes in the last half an hour, it has pulled back to where it is no longer by definition a breakout.
I think that's a profit-taking candle, brother.
For sure.
That is obviously you're seeing the sell-off the last hour in the market here, but to me, you're sitting at that old resistance zone right here at 7,700. It tested above it. It's had a prolonged movement to get into it. It's starting to roll over. That's an inverted hammer candle. Tim, I think you said it the best. The very first thing you said today, I'm more interested in the close than the open on a day like this. So am I. That close is going to be very important. You said I locked in profit on CRM and Microsoft last week, but you take a look on some of those trades. If you're still into CRM, I think that's a profit taking day here. in any capacity. Same thing with not necessarily as much with Microsoft, but definitely with CRM and some of those other tech stocks.
Give me Apple though for a second, because this is one where, and yeah, biggest stock in the market, one of the most important companies in the market, and very critical for the NASDAQ. There's no question about it. I think this is also a profit taking zone because the 230 was in play. Any technician knows.
Take the gap gift.
Short-term profit, I agree.
Yeah,
but couldn't you make a very, very strong case that breaks into new highs? It's still a new entry point.
No. If it breaks out at 230, I'm buying.
Yeah.
But there's a difference. There's a difference between when you're in a trade and you're at a resistance point versus when you're getting into a new trade. If right now you have profit in Apple, if you bought either one of these retracements, either here or here, you have good profit in Apple. To me, with the weakness after the gap up, that's an easy take your profit and kind of just wait and see if it's going to break out. You can always get back up into the trade, Tim, but how many times do we see stocks get up into that resistance level, fade to the right, come back down a little bit, form that cup and handle, and then break out? I think the breakout here is an easy call, and I think locking in profit here if you're already in off that retracement is an easy call as well.
Yeah, and if you have a long-term core position, there are things you can do. You could sell a call against it out of the money to
There's lots of things you could manage.
Yeah, for sure. But it's definitely at a zone where you would be taking profit or adjusting or hedging the delta. Amazon's the same way. One stock that I'm very fascinated
with. Now, very quickly before we move on from Apple, I do want to make sure that I'm clear on the breakout of 230. I think that would be a significant breakout. That's an all-time high breakout.
There's no doubt. I actually think this is a $300 stock. So, and I don't say that lightly. Yeah. I look at the PE ratio and the multiple compared to what other stocks are doing in that sector and their cash.
It's a $300 stock, whether it's in 4 months from now or 4 years from now.
Correct. And it will depend on market conditions for sure. Yeah. But if the market stays bullish and it breaks to new highs, I would still see those as entry points that you can play. As I go through tech though, Matt, I don't see strength everywhere. One of the stocks that I want to look at here in a few minutes, and we can just kind of take a look at it right now, is Facebook. And to me,
let's look at Facebook though. Let's talk Tesla first. We got to get Tesla out of the way.
Oh, they're in the news every day.
Because
gap down, gap up, 15%. What do you think of the whole thing?
I think it's a joke. I think the SEC is a joke. I think they're limp. I think they lack all courage. They lack all moral fortitude. They're an unethical organization, and I wonder how many of the SEC bought call options before they made that weak ass announcement on giving him a $20 million fine. Talk about Jamie Dimon at least get billion-dollar fines. Elon Musk a $20 million fine. And I just want to say something very quickly, guys. Number one. Elon Musk was fined $20 million, was removed as the head of the board of directors for 3 years. He is still CEO, and that's why Tesla is moving up in price. Now, mind you, Elon Musk owns $8 billion worth of shares of Tesla. Okay, $8 billion, Tim. And the SEC stated that they wanted the $20 million and Tesla to pay another $20 million, the $40 million to basically offset some of the damage that had been done based on his tweet. Now, mind you, Elon Musk just made over $1 billion today on that SEC price movement. That is a joke. That is a crime. That is unethical. And the SEC is an illegitimate organization. And they remind me of Moody's and the S&P in 2006 and 2007, when they were blindly turning a blind eye to the manipulation that was happening in the financial sector. And it is an absolute joke. It is criminal. It is completely anti-capitalist, and only billionaires get away with this. They send Martha Stewart to jail for getting a tip. Elon Musk manipulates his own price. He's the CEO, and he makes $980 million in a day based on this bullshit. So that's all I have to say.
Well, Elon, This year for Tesla is going to be obviously one of their banner years, no matter what. They've had news all year long. It's been crazy. It's not just this recent deal. We've been talking about it for a long time. It was going to be fascinating to me watching Tesla, because Tesla is one of those companies, California based, Silicon Valley type, innovative, future driven. Everybody who believes in them, Matt. Will those fanboys stay through 2018?
I care less about the fanboys. Get out of here.
Right.
Whatever.
I'm interested in the company long term.
Tesla's in the same capacity as Chipotle is to me. So I don't care about the fanboys.
Right. Well, I don't have as strong an opinion about the fanboys or not. I've met some people who work for Tesla. They seem like to be fascinating. What's interesting is going to be with the stock price. I don't trust the gap here, by the way. I actually think it's an entry point for a potential something bearish. Going long puts are almost impossible because the implied volatility is 85%. You can't pay for that kind of premium.
Oh my God, you are paying such a premium right now.
The
only thing you do is bear calls bull puts.
Right. Yeah. Bear call could work. You'd have to get enough cushion to feel comfortable. I don't see some huge upside rally out of this news, Matt. I mean, it's just repricing the gap.
Basically wiped out the last 2 days. I mean, we're basically this whole SEC agreement is basically pretending like the last 2 days didn't happen. It's basically pretending like August 8th and his funding secured didn't happen. The SEC had him in the bullseye. It was a lockdown, shut it down case. It was complete. There was no evidence of any funding in any capacity. The evidence was overwhelming. The SEC says, "Oh, let's not hurt the investors." Well, what about the short sellers? You son of a bitch! Ooh, I'm out.
Oh, you're not a fan of Tesla right now. I can pick up on that.
No. Hold on. I'm just not a damn hypocrite, Tim. That's what I am. I have said this for very long. You should not manipulate the share price of a publicly traded company. I've been against it when the Fed did it. I've been against it when the banks do it. I'm against it when the institutions do it. I'm against it when the government does it. And I'm against it when party boy CEOs of bankrupt companies do it too.
Well, probably the biggest manipulator of all of them then are those dark pools and the people who run automated trading systems like BlackRock Financial and whatnot. We could have some fun going after those guys.
Yeah, let's send some kid to jail in London for 20 years for running a high frequency trading and spoofing the market and causing $1 million problem, but let Goldman Sachs do it all day long, SEC.
So you want to talk about Wall Street banks? We could look at JP Morgan, Goldman Sachs. I mean, listen, I just feel like we're winding you up right now. We're just getting started. I'm just going to crank that lawnmower and we're going to rock through those charts. Hey, I like it. A little fire here on a Monday. By the way,
I'd rather talk about shorting Facebook under 160. I think
we're going to do that as well. And Halftime Crew, if you're out there, hashtag Halftime Crew. We're at the halftime mark of our halftime show.
What's up, ladies and gentlemen? It's good to see you guys. Love you guys.
Give us a quick like and a share. It's always great to have you guys out there.
I mean, I want to ask the Halftime Crew because sometimes I can get very opinionated with my principles. I get that. Okay. But am I wrong? Am I wrong? Am I wrong to call Elon Musk a fraud here? Am I wrong to call the SEC criminal for being compliant in this nonsense? More people should stand up and say this is wrong. This is why Wall Street gets away with their bullshit. This is why Jamie Dimon gets away with it. This is why the central bank gets away with it, because fanboys of Elon Musk good job, Elon. Good job. Get out of here. Consumers need to stop supporting billionaire bullshit.
Hold on, I got a short Tesla. Oh no, say la vie. Oh, I love it, and I
want that on Twitter, Cody. Consumers got to stop putting up with billionaire bullshit. Get it out there.
Oh, opinions. It's good to have a take. There's no doubt about it, Matt. Obviously, we need to have strong consumer protection and investor protection. The bigger problem I have is not with Elon Musk. It's with the SEC going that quickly to a compensation deal and just being bought out when there was real. That's where I have a problem. That's the
I hate the SEC.
body.
The SEC was a joke before this, though.
Yeah,
The
yeah.
SEC has been looked upon as a joke for 15 years now. They're a lifeless organization with no ammunition, and everybody knows it. And it's just been proven here today, or over the weekend. My problem, and yes, maybe I'm a little emotional because I believed in Elon Musk. I liked Elon Musk. I've said multiple times, I'm going to Mars with Elon Musk. I was in that category that had a tremendous amount of respect and love for his passion for advancement in technology. And that is still there, but I can't get away from it from a principled individual. I cannot get away with the fact that what he did was completely and utterly and just wrong, He did nothing. He just put himself into the category of the people I can't stand, like Diamond.
I don't think he had malicious intent. I think he got stoned and made a joke. That's my personal opinion. But so I don't have the same.
Okay, wait a second. As a lawyer, the evidence is overwhelming. It is overwhelming.
Don't poke the bear. All right.
I was going to go off on an Aaron Hernandez rant. The
we'll
evidence is overwhelming here, Tim.
Listen, I'm with you. Let's go out and find some opportunities.
I'm shorting under 300 if I get volatility.
Well, I said this to the coaches last week, by the way, guys. I think Tesla under 250 is an incredible swing trade. I know here at 300, where you got a lot of gapping, you cannot play this just with straight options.
I don't think you can play directional options. You cannot play directional options.
There's so much going on here.
Trader.
It's a pro trader's setup, and probably even a stay away at that, by the way. I would not fault anybody for saying somebody else traded. I'm not interested.
If you were in a criminal court case and you said, listen, I am sorry, judge, I was just really high that night, you would still go to jail, bro.
Oh, c'est la vie. All right. Let's take a look at some of the other indexes before we get into Facebook and stock of the day. Yep. I want to quickly run through the dollar and whatnot. We do need to look at the RTY. Significant, in my opinion. Guys, we have been talking about this. Don't skip the Russell.
Oh, right. Yeah.
We've been talking about small cap weakness now for some time, guys. That is a nasty candlestick. Mm-hmm. I've got some concern on the downside. If you are a cash flow condors trader, in my opinion, we're in the middle of a neutral range. New entries make sense. If you are in just short options on the downside, you got to build a plan for hedging and money management. Know your rules, know your system.
That's an ugly, ugly candle there, Tim. And this has been rotating for weeks now, in my opinion. I was probably a little more bearish than you were on the small and mid caps, but it's rotating. I expect it to come down a little bit more aggressively. Obviously, the mid caps don't like the NAFTA, the new USMC deal.
No,
but I have not dug in to see how this deal would impact small and mid caps yet. Okay.
Well, I just think it's a rotation out of risk, Matt. I mean, smaller stocks. And when you start going through the market and you look at individual components, there are so many companies out there with ugly charts. And it's the theme of the year. What's been holding the market up for so long are the companies like Apple and Amazon and all the big caps. Yeah. Weakness in small caps. There's no,
I'll tell you, I'm not, Tim, and I just want to just from an analysis perspective here. When you see those blue chips at resistance trying to break out, but the small caps coming down, I don't buy that breakout very well. I just don't trust it, right? And it's just more evidence. I'm not trusting the market right now, to be perfectly honest with you.
Yeah, if you pull that thing back, though, we do have short-term weakness, and there is some concern, and I am moving it to neutral, but I'm not bearish yet, Matt.
I'm bearish on the small caps. I got a -1 rating.
I'm still neutral, and I know we're below that 50-period moving average, but we've seen that many times. In fact, this index will dip below the 50 before it rallies. I look at support at 1660, 1640. There's a couple of different layers in there. It's got downside. Don't get me wrong. I see the risk, and I can understand a -1. I currently have it as 0 myself, kind of as a neutral. That's slight difference in opinion on that.
Just my standard protocol. Short-term bearish downtrend, I always go -1.
Yep, gotcha. Let's go through the dollar. DXY would be next. Man, the dollar's set up for a sell-off, in my opinion. I know it's shown great strength. Green.
Such a tough triggers, though.
There's no real trigger here. Yeah.
I did the Forex report for Tackle this past weekend. And definitely, guys, for the pro members of Tackle Trading, definitely make sure you go watch that Forex report. even if you don't trade Forex, we've said this so many times, guys, in that Forex report, I take a deep dive in how you could trade ETFs versus the currency pairs. And I wrote up a lot about, the 24-hour marketplace and, how that is impacted. So definitely check out the Forex report, guys.
I agree with that 100%. Same thing with the commodity report, same thing with the market scoreboard. A lot of this stuff, guys, even if you're not trading, say, crude oil today, because I don't have a position on crude oil, I look at crude oil every day. Even if I'm not going to short the euro today, Matt, I'm going to look at the currency markets every day because they're so important to the market. Dollar currently going up, 95.50 is some resistance zone. As you look at the other currencies, if you had to kind of identify a few that you would consider as a short position against the dollar, long in that currency, I mean, which ones are you looking at?
What was interesting in looking at the Forex, let me see here, see if I got it here. Give me 1 second. What was interesting when I did the Forex report from this past weekend, Tim, was there wasn't anything that really kind of stood out, like this was the one currency that you wanted to go to. There was a lot of things that were setting up, but there was also a lot of neutrality, and that's to be expected when the dollar index is in some type of neutral capacity. So there was a lot of neutrality there, but I did see a couple things. Number one, the Japanese yen is just showing tremendous weakness right now.
Trash.
Yep. It's just an absolute trash currency right now. And you might have to wait for some specific setups, and you might have to go look at some non-US dollar Japanese yen pairs to trade the Japanese yen, but I break that down in the Forex report. But the Japanese yen is showing tremendous weakness. I would go look at every major currency against the Japanese yen if you're looking for some potential, long opportunities against the Japanese yen. Also, the Canadian dollar, and mind you, this was before the whole news of the deal came out, but I was showing some strength in the Canadian dollar. And as you can see here, the dollar just got crushed against the Canadian dollar. And that was a pick that I had in the Forex report, was a short dollar, long Canadian in that capacity as well. So I started seeing strength coming into Canada. I started seeing weakness come out of weakness in the Japanese yen. Also, from the US dollar, British pound / US dollar here, you're looking at a little bit, and this was something that, I'm looking at a potential trade here, Tim. Short-term bullish uptrend overall, trying to do a little bit of a longer-term reversal pattern here, setting at this 130 mark. 130 has been an important level for that. So that was in the Forex report as well, and I talk about where to place stop loss and triggers in there. So there was no one currency that was really kind of setting up outside the strength coming into the Canadian dollar and the strength coming and the weakness coming out of the Japanese yen. But this trade on the British pound, I think, is setting up for something a little decent. I would wait for a couple of days to let it kind of smooth out the volatility over the announcement today. But as long as 130 holds in the British pound, that's, to me, a fairly good trade.
Yeah, I agree with that. And really good job on that report this weekend. Everybody go check that one out for sure. Currency markets, that's leverage, that's directional, it's speculation, but there's a role for that, Matt, in any portfolio, especially with good money management and design. You can find a niche in there for sure.
Yeah, and let me just kind of show something here. FXB. Okay, so what I did in the Forex report, I did a little deep dive. I'm not going to do it here, but basically I talked about how instead of trading the actual British pound dollar cross pair, when you're talking about the Forex market, you have XFB here, which is, you're looking at a very similar trend, very similar pattern. This is the British pound US dollar ETF. This, you can trade stocks on it. You can trade options on it. A lot of those FXIs, FXBs, FXEs, the FX and then the symbol of the currency, that would be your ETF. Some of them are not very liquid yet, but they are increasing in liquidity. And in the options, even though they're not the most liquid and they don't have weeklies, you still have fairly tight bid-ask spreads here to play with from a directional perspective.
Awesome. Got a bunch of stocks I want to run through here, Matt. Also sectors, and as we begin the week, I always like to look at some of the sectors. Healthcare, discretionaries, tech all look pretty good. Financials still look weak to me. I want to get your take on just one sector chart here, XLF. You were going off on Wall Street banks, and I was half joking, but half serious about looking for some of the brokers to sell, because I'm looking at a chart that to me is rotating out and showing some weakness.
I think the banks are extremely weak right now.
If the markets turn over, financials could turn over pretty.
The banks the banks are weaker than this chart says.
Mm-hmm.
Okay. This chart, even though it's ugly in the last week, this chart, if you take out if you take out finance, not finance, but if you
Insurance
take out
companies.
insurance companies and if
Mm-hmm.
you take out the credit card companies, those banks are getting destroyed. The
Yep.
banks are extremely weak right now, and I think they're going to continue to show weakness.
I think there's opportunities on the short side in that sector and in that space here this week. There's quite a few picks on the reports for that kind of idea as well.
I just want to give a shout out very quickly to the halftime crew. Halftime crew, we just hit over 70 live watching. Good job by you guys. We love you guys. You keep up the great work. We'll keep on bringing the fire for you guys on a daily basis.
Yeah, let's break down the commodities real quick here, Matt. Gold and silver first, because I want to spend a little bit more time on nat gas. Gold in the middle.
By the way, Tim, real quick, great commodity report. Well done.
Thanks, man. I love breaking down the details. And obviously, I got to tell you, I've been trading gold so much this year. It's one of the biggest products in the world for a reason. I love the metals. I had been bearish for a long time. And anybody who watches these shows knows Matt and I were bearish when the chart was bearish. But Matt, and it's not there yet. I'm starting to get interested on the bull side. And I know we need a trigger and a breakout, but the momentum is telling me something. And the compression in those moving averages is telling me something too. Short-term trend's not as weak as the long-term trend. It's starting to rotate into neutral. What's your read?
My read is this. I am so overtly biased on this right now that I cannot I can't make any trade in the commodity market, Tim. I've spent the last week researching for personal gold. And let me just show you kind of where I'm at right now, guys. Okay, I just want to show you kind of where I'm at. This is my research into personal gold just on the historical narrative. Okay. This is the history of the United States dollar. This is the history of gold and silver as it relates to usage in the United States. This is the history of the reserve system and how it everly changes. This is the timeline of historical reserve currencies. This is the history of fiat currencies. And of the 595 currencies that have utterly failed, a majority of them failed because of certain hyperinflation or war or so on and so forth. But I'll tell you, Tim, in my research, it leads me to believe that the US dollar will lose reserve status at some point. And that point is nowhere near us. Okay. It's nowhere in the horizon. You can't see it. It's that far away. But I still believe there is such a strong case for the physical metal to protect your fiat currency that I'm a little bit biased today. So, now as a trader, you always try to remove that bias from the equation. But I've just put 80 hours into research on this week, and that's after 10 years of research. So I'm just a little biased today in terms of that. I would, if you're picking up physical metals today and saying, I'm going to buy them at 1,200 because that's a cheap price historically, I would have absolutely no problem with that. That's a historically cheap price. But if you're looking to trade the paper, you're making a mistake here. It still has bearish bias in it.
Yeah, but I'm feeling a change. I'm feeling some, just because I watch this all day long, every day pretty much. And, because it's just part of the major markets.
Double bottom at 1180.
It's maybe not there yet, and it will have downside, I'm sure. But, I would be interested in some upside action. You're right. You do need to get a trigger.
I'm neutral on it right now. Yeah. I'm neutral anywhere between 1180 and 1220 at this point. Yeah. We were trying to, for weeks and weeks, we were trying to find that short bearish opportunity, right? And we were like, okay, under 1200, that's going to be an opportunity. And then it would test under 1200, come right back up the next day, and it would never have any follow through under that. And that happened so many times, Tim, but then it wasn't 1200, it was the trigger. It was ultimately 1190 was the trigger because it tested and tested and tested. And now it's not even that. To me, the ultimate has to be, under 1180 or above 1220.
Yeah, I like those triggers as well. Silver actually taking it more on the chin here today.
Kind of to be expected after the move it had last.
It had a big rally. I like silver above 15. That's where I put my trigger, especially if you're looking for, something to go long here. 15, and we're a long ways from that. So silver's got some time. What's your read on crude oil? Crude oil just taking off again, $1.67 here. Even strengthening through the day from the morning.
It's a juggernaut. You can buy that above 2075. I haven't done it. I've been a wimp. I've talked myself out of it every single time, Tim, and I'll probably talk myself out of buying the breakout of 75 as well. But it's certainly legit.
I understand caution because I have it as well. I'm not playing it long yet either. I've missed the entire breakout run, literally 4 or 5
The last 2
hours
weeks we've missed the last 2 weeks, Tim.
Well, we've seen it. We've called it. We just haven't pulled the trigger on it because we didn't like the price.
No, we analyzed it every day. Every day we said no.
Yeah.
Every day we've been wrong.
C'est la vie. Crude oil is showing tremendous strength, which does get me down to the other energy that we watch every day, Matt.
Are you wrong if you're too cowardly to pull the trigger? Does that mean you're wrong?
Not wrong if you didn't lose money. All right. So I'm okay with staying.
We missed out on the opportunity.
We did miss it. NG is the next commodity I want to take a peek at. I actually like this one here as an entry, Matt. It's bullish, triggering, showing tons of strength. Seasonal.
It's above 3. Yeah. We talked last week how you could play this on UNG above 25. I got no problem with that. You could even do covered calls here.
And I know that when you're up 3%, it's hard to want to go out there and swing trade something already up 3% on the day. But I do love the bullish nature of the short-term moves here in NG. And really it makes sense because your energy stocks are starting to kick up with the crude oil. And now natural gas is also following.
Real volatile last week though, T.
It's been crazy. I know it's not an easy one to manage, but I do like the upward action there.
I'm never a fan of buying after extended price movements. Maybe you wait till it sets up a little better, but it's shown tremendous bullish strength here today. It does have that overall intraday resistance zone up here at about 311, but it's a bullish trend, no doubt about it.
2 stocks I got my eye on here. Number one is I really like Facebook breaking down. It's a counter market trend trade. And by the way, it's right in line with its swing setups, though. If the tech stocks or if the market at all has any kind of pullback, stocks that are underperforming are going to take it on the chin. I got a trigger here at 160, Matt. This is my pick of the day. What do you think?
I think you're already in it, right?
Yeah.
I literally think you sold the top here. I think that's exactly what happened. You got the trigger at the very top there. But no, it's a great trade by you. Great call by you. I didn't get into it. I'm looking to get into it under 160 as well. And I think the best way to play that is probably from a vertical debit spread perspective, bear put spread.
I would agree with that. I was looking at Facebook options here today, and there's a couple of things that you got to be aware of whenever you start prepping a trade. And just full disclosure, I like credit spreads more than debit spreads in general for my philosophy and the way that I trade. But you can't do them all the time. Facebook earnings are on 10/31, so you got about the entire month of October. You could position trade that, and you could credit spread trade that.
Easy.
Volatility on Facebook is right in the middle. So if I did the 26 October weeklies, Matt, you're 25 days out. That might be a little.
You go 32 days out. You're not holding through earnings. I mean, your hope is that you're going to capture the theta decay between now and then.
Well, and here's the thing. I don't think the market is compensating for the upside risk on a credit spread. I'd have to go to the 175 strike to only get 10% return on a.
That's too high. That's too aggressive on a delta. I mean, the older I get, the more conservative I get with delta, Tim. I remember when you and I were young traders, we would pop 25 deltas all day long on credit spreads, and we'd be like, yeah, hey, look at us. We got 75% probability of cash flow and 29% ROI.
That's
boom,
right.
boom, boom. But then you don't understand what the probability of touch is, and you don't understand how to manage that probability of touch, and you end up taking it on the chin. So typically speaking, I like to do like 15 deltas on directional credit spreads, meaning you have a directional bias, bear calls or bull puts, and 0.10 deltas on condors like we do in the Russell 2000. But you're just not getting the credit at a 15 delta to justify the transaction, T.
No, you're not. And by the way, I'll give a strong recommendation out there. Everybody watching the halftime report, go and download the Tackle Theta research spreadsheet, and learn how to put the numbers in there, because Matt, you and I, we can process these numbers instantly because we've looked at them for so long.
It doesn't have a good ROI. Let me just put it like that.
It doesn't. I know that you won't. Even at 180, 185, Matt, there's not good money there for the amount of risk that you're taking.
And you know why? Because you don't have a good ATR buffer.
All of those things are true.
That's why you should go master that spreadsheet so that you can look at those numbers and without even looking at the spreadsheet, know what the numbers are going to be.
Strategy selection is a very important part of your daily trading process. There's no doubt about
that's why it was an easy call for me for a bear put spread on the vertical debit versus the credit.
I like it. I think that would be the right idea. What's your stock of the day, Matt? What's what you got?
I really don't have a stock of the day. I have lots of stocks I'm looking at, in terms of potential setups. But if you're looking for some setups, and again, if you're always looking for setups, guys, the best setups in the world are over there in the scouting reports every week. Another marathon journey of a Friday, 3 hours long, and in that scouting report meeting. But some of these stocks that are setting up in the industrial sector, I like this one here with the trigger above 80 on AME.
It's beautiful setup. XLI, all those different ones we looked at earlier. There's a bunch of companies on there. My favorite one out of all those, by the way, was Cummins. I did like CMI the most.
Yeah. However, Cody's was Boeing.
Well, didn't I say that last week? You can always just buy Boeing.
Well, we all said that. We all said we're going to wait for the breakout.
There it is. The breakout.
This sucker. It's a company we all love, by the way. I mean, we're all fans of Boeing, the great company out of Seattle, Washington. But this is the juggernaut. This is the reason why the Dow is kind of moving up today, is because of the Boeing. It's a beautiful chart, beautiful breakout.
For sure. Yeah, Boeing, beautiful breakout. Netflix actually still, I think, looks pretty good. I know that it is showing some hesitation down here, and I know that you've had some stuff on this.
It's legit. You can do it, no doubt.
It's got volatility, still showing some strength. Market even down here today. Quite a few things on the economic calendar here this week, guys. By the way, pay attention to that. Over at Forex.
When you say quite a few things, Tim, here is quite a few things, right? But a lot of those are minor economic reports. I don't think you're going to have nearly the important economic reports this week than you had last week. But you do, the ones you should be tracking this week are the manufacturing reports on Monday. As you can see right here, a little dip in manufacturing, nothing to be too worried about. The ISM manufacturing report on Wednesday, and then obviously the unemployment numbers that come on Friday.
Yeah, going to be a busy week and also a busy month. We are moving into earnings season. That'll be a conversation we have here on the halftime report very regularly. A bunch of companies going to be blasting off next week.
Very quickly, just to show you kind of how you can track that, guys. If you come to the website, go to the Trade Center Market Skyline. You can go to the it's coming up.
It's there, just loading.
You can go to the performance and where's my earnings date. There you go, guys. And how you can read this chart is if we scroll down just a little bit here. Okay, well, it won't let me see it, but you can kind of see it down. Let me see if I can do it like this. Nope. For some reason, it's covering the little code down here. But you see the pink ones? The pinker it is, the closer it is to earnings. The blue ones, a little further out. A lot of earnings coming up very soon. October, obviously, third quarter earnings season. It's good. We've had great earnings so much year to date. So obviously, every day we'll look at those earnings and make sure you're prepared for them.
Yeah, October, January, April, and July, the month after the quarterly, reporting cycle ends for most companies when they hit them. So that's kind of why that is what it is. A lot going on out there, Matt. That's all I got here for today. Great job by you. Great job by
you. Hey, guys, if you like the show today, make sure to give that nice little thumbs up. Thanks, everybody. We'll be back tomorrow, same time, same channel. Until then, guys, have a great day trading. And make sure you catch the podcast when we release the podcast later on today as well. And then we'll talk to you guys tomorrow. Thanks, guys. Appreciate you.
Yep.